Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed right here on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Friday afternoon, we have Ben Jones, product development specialist with Nasdaq Index Research, to discuss Nasdaq 100 relative strength versus S&P 500 versus Russell 1000 value versus emerging markets and versus fixed income. We have a lot to uncover here. So let's take a look at the Nasdaq 100 versus the other major averages.
Yeah, it's a good time to talk about it, Jill, right? Because, there's a lot going on right now. And I think a lot of portfolio managers are continuing to reshuffle their portfolios. We also are heading into the heart of earnings season. So, I'm sure a lot of your trade talks will be focusing on the fundamentals. So I think a good time today is to look at the technicals, right? And one way to do that is looking at relative strength, which is to form a momentum, right, where you're basically looking at leadership by comparing, one stock or one asset class or one index against another to see which one is performing well on a relative basis, i.e. outperforming. So if we look at the Nasdaq 100 today, and we look at it against, let's say, the large cap S&P 500, that's the chart on the left-hand side, and we look back at the past 3 years, we see that the Nasdaq 100 is clearly the leader from a relative strength standpoint and has been outperforming the S&P 500 over this time period. And you can see how that chart is trending higher, which is a sign of relative strength for the Nasdaq 100 over the broad market. If you look at, let's say, a shorter term time period, looking at the past 3 months, and this is something we talked about a little bit last year, the value trade coming back, where we started to see kind of large growth trail large value. You see this reflected in this relative strength chart, which compares the Nasdaq 100 to the Russell 1000 value index. When it's below that horizontal line, it means that the Nasdaq 100 is underperforming and is weak on a relative strength basis. Now, this is a very short-term time period. Typically momentum and relative strength-based investing looks at that sweet spot between 9 and 12 months. Right now, I would say it's too short-term to be saying that there's been a total switch, a regime change between large growth and large value. So we are seeing the Nasdaq 100 crawl back, so to speak. Values up about 15, almost 16% during this time period. Nasdaq 100 is almost up 15%. So we're seeing some competitiveness there. Now, the international trade. I think this is fascinating. If we look at the Nasdaq 100 against emerging markets using the Nasdaq Emerging Markets Index, if we look at the past 4 years, and again, 4 years was done on purpose. It was the presidential time period for President Trump. Of course, now we have President Biden. What's really interesting, if we look at the last 4 years, while he was president, at the beginning of that period for President Trump, there was a lot of choppiness with the Nasdaq 100 relative to emerging markets, and then all of a sudden it took off. And what's interesting is that the Nasdaq 100 really started to outperform right after all those tariffs went in place, and we had the trade war with China, that tit for tat period. Over this time period, the Nasdaq 100 actually outperformed the emerging market index. Nasdaq 100 was up about 164% compared to only 47%, for the emerging market index, Jill.
And let me ask you about fixed income, because you do the comparison with the Nasdaq 100 to fixed income. Why would you look at fixed income versus what's in equity index?
Yeah, so it's an important relationship, right? Because we want to see how equities are doing relative to bonds, right? And one way to rephrase it is, the risk on trade versus the risk off trade. So I think it's important. We see, equities versus the defensive asset class of bonds and what they represent. And so if you look at, let's say, bonds in general, we see how they've actually, have lagging the Nasdaq 100, right? And that makes sense, right? We see the Nasdaq 100 moving to new all-time highs. But on the left-hand side, that chart shows you the past 3 months, going back to the end of October. And what you see is that at one point in time, we did see some positive momentum for bonds, but it was short-lived, right? Once the election was over, we started to see equities rally back, and that defensive, uncertainty trade was off the table. If we go back even further and we look back to the past 20 years, you can see just how strong the Nasdaq 100 has been. And I think this is important because we've been in a period of the past 10 years or so where equities have been favored, but that hasn't always been the case. We've been in a period where the Nasdaq 100 has been outperforming, but it hasn't always been the case. You can see in that stretch, which we call the lost decade for U.S. equities on the right-hand side, bonds were actually outperforming the Nasdaq 100 for a good portion of that time period. Again, we had multiple bear markets, 2000 to 2002, and of course the great financial crisis. The key, though, is that we've seen a lot of persistence in momentum for the Nasdaq 100 over bonds, and that really started in that 2011, 2012 time period.
And finally, Ben, let's wrap up with this, because you take a look at relative performance within the index itself, which I think is interesting because we kind of hear this narrative all the time. There is, a cluster of stocks that is moving the index.
Yeah, so we've seen how the index, the Nasdaq 100, is strong against, the broad market, beginning to pick up that short-term momentum against value, favored over emerging markets, favored over bonds. So what's really leading this index? Where's the momentum found? And this is a ranking that is done daily by our group, Nasdaq Dorsey Wright. Essentially, it's a relative strength ranking of the Nasdaq 100 components, the constituents that make it up. Those areas at the top that you see in this ranking are the strongest names within this index. I mean, it's a good mixture, right? Of course, you see Tesla up there, but you see also good representation from some of the international, some of the ADRs. You see a heavy tilt towards technology. That makes sense. You see some semiconductors in there. So it's a good mixture of names and names that are have a global representation. So this is the top 15. If you go down a little bit in the ranking, that's when you start to see some of the healthcare names beginning to rise in the ranking. We see some stability up there on a long-term basis. That's the column to the right of the name. We haven't seen a lot of change in ranking because there's been a lot of stability within the index from a relative strength standpoint, which is just a sign that those leaders continue to outperform in this current market environment.
All right, Ben, great recap. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.